Welcome to this video. In this video, I'm going to show you exactly how I use the volume profile to my advantage when I'm trading ranges. If you don't know me, I'm Memon. I'm the co-owner of MET Trading, where we get people profitable faster by using a clear systematic range trading strategy. So let's get into it. Let's start by discussing what is the volume profile. The volume profile basically shows you the volume divided on the horizontal axis. So normally you see it vertically, here you see the volume, but with the volume profile you can see it horizontally. It basically, I use it when I'm trading ranges. So first of all, you need to identify a range. There are different ways to find it, but the most usual one is to have at least one tap at the high, one tap at the lows, and then a tap of the mid-range. The volume profile basically consists out of three main areas. So we have the volume profile, which is often shaped a bit like this, because in a range, as we know, most trading happens in the mid-range. And that's why the volume profile is mostly divided with the most volume in the middle part and then little volumes at the extremes. As we know, we have a range, and then the higher part is what we call the premium, and what we call the lower part is the discount. Then the last 25% of the upper part is what we call the extreme premium, and what we call the lower part is the extreme discount. As range traders, that are the areas we want to do most business, because that's where we can expect the rotations to the other side. I'm trading ranges a lot. I love it because you have systematic rules. You know when you can take a trade, when not. So the volume profile is a great tool to use to your advantage when trading ranges. Let's discuss what it exactly is. We have the value area high. This basically shows you where 70% around that number is divided. That's between the value area high and the value area low. The value area high is the upper part where 70% happens, and the lower part is what we call the value area low. That's basically the moves where the most volume happens. And then the extreme premium and the extreme discount, that's what is above the value area high and below the value area low most of the times. That's where price doesn't spend much time. So as a trader, especially as a range trader, we know if price is in the extreme premium, that's where we want to look for rotations back to the other side. As well, if you have moves in the extreme discount, you want to look for rotations back to the other side. Then we also have the point of control. Point of control is basically the area where the most volume has happened within the range. That's this area right here. How do I use it? Basically, when you have a range, the value area low is an extra confluence. When you have price spending time below the value area low, then the value area low acts as resistance. So that's where it can reject off. So then you have to be careful that it's not just a bearish retest. But when you get acceptance in your value area low, that basically means that you can expect a rotation back to your value area high, at least, and often as well to the value to the range high. The same is true for the value area high. Let's say that price spends time above it. While it's above the value area high, then it acts as a demand zone. So then you could expect a rotation higher. However, if you have a move above the range, above the value area high, like here, afterwards you get acceptance below your value area high here, then that's often a sign that this was a deviation, so a manipulation move. And then once you get the acceptance back in the volume profile, then you can expect at least a rotation back to the other side, which is the value area low, and oftentimes also the range low. Then how do I use the point of control? The point of control is basically a level where most volume has happened. So that's an area where you want to look what price does. If price comes from above, it can act as a support zone. If price comes from below, it can act as a resistance zone. Since it's mostly around the mid-range, it's more of a level I'm watching what does price do. If it's from above, if we stall here for a long time, then you can close your position a bit. But overall, the point of control is an area where you don't want to get into trades. You want to do business at the range extremes, so at the range highs and at the range lows. If you get in a position, for example, when the value area low is reclaimed, then you can watch what happens at the point of control and then make decisions based on that. But overall, you don't want to get into positions in the middle here. We want to do business at the extremes. So let me give you an example where we go in a real life example. There are a lot. You can have it on every time frame, because ranges can be on high time frame, ranges can also be on lower time frames. This is, for example, the chart on Hype, 50-minute range. Here you can clearly see that you have sideways price action. So here you can draw a range. In this case, my starting point was here till here, and then we took the high. So this was the range I drew. And then always what I like to do is to look for confluences. So I draw my volume profile, take it, we draw it basically from the left to the right, and then you can see that the volume shows up here. Here you can see that also in this example, the volume profile is shaped a bit like I gave an example, then you know that you have to deal with a range. So that's a good thing to know. Furthermore, what we can see is that this is at the start of the range, so then it's not too reliable. But once you have identified your range, so here we had first tap, and here tap, then here. And from this point, you can see what are the reactions at the value area levels. So in this example, you can, for example, see that price gets above the value area high, then it comes down, where it actually forms a higher low compared to this low. And where does price hold up? It bounces from the value area low. Then it comes back up. Here you see that price has the breakout. So remember what I said, as long as price is above the value area high, you have to be cautious, because this could just be a higher low and then price continues higher. However, when price deviates that can be a sign that you get a rotation back to the other side. So here we already deviated our high, so we have our 1, our 2, and then this is our third tap. That's a topic for later, but this is a Wyckoff distribution, potentially in the making. Now you always want to look, what is my structure? If you can see here, these are the last at least 2 candles going down before we reach a new high. So this is your market structure. In this case, you can see that the market structure, so this is your level you have to break in order to confirm the break-off structure. Here we can see that that perfectly overlays with our volume area high. And as I said, when you get acceptance back, if you have a deviation and then you get acceptance back in your value area high, then you can at least expect a rotation back to your value area low. So let's see what happens. Here we get the break-off structure. This is a confirmation that this was a fake move. And then you can aim, you can, for example, open a short here and then aim for the value area low. What's good to see here is that price comes below the value area low, reclaims it, pushes back. Where we reject? We reject again at the value area high, after which price once again comes back for a value area low, where we are now. So here you can clearly see that we have a bigger range, which is from this low to that high, but that the most volume happens between your value area low, value area high. That you constantly have rotations from high to low. So that can give you extra confluence when you're trading ranges, which is a strategy I very much encourage people to learn, because it reduces emotional hurdles and you just have very clear rules where to work with. So it can give you the extra confluences where you know we have the deviation, acceptance back, then we go to the other side. Right now price held the value area low, could potentially be a sign that you get back to your value area high. If you then afterwards reclaim back above your value area high, it could potentially mean that we are ready to break out. Another use case is that you have a not too clean range. For example, on chaining, this is a 4-hour chart. Here you have a bit of a sloppy price action, but then to mark out just some levels, you can take your volume profile, pull it to the right, and then see what you got to work with. Here you can see also a volume profile. It's not the most beautiful one, but in essence it comes down to the same, where the point of control is around in the middle, and then 68% happens between this level of the price action and between this level. What you then can do is to look where's my range and where can I expect reactions. So here we, for example, see this quick move above, but then price comes down, reacts from the value area low, comes back to just below the value area high. And then you constantly see that price is rotating from value area low to the point of control, back to the value area low, little deviation. And then once you reclaim, what I showed, if you have a move below the value area low and then a reclaim, then you can expect a rotation back to the value area high again. That's exactly what we have here. Price comes back to the value area high. At that point, you can also identify that this is not truly part of your range, because this is more of a quick fake move. So then you can see that your true range is around this level. That can also give you signs where to draw your range. And then if you delete the volume profile, then you see that this range is basically what you have to work with, because after the price came in the value area high, it stalled here for a while, but it wasn't able to break above your value area high. And as long as you don't have a break above your value area high, then it's not a true breakout. So then you know we are still range bound, and then you can look for rotations back to the other part of the range. And that's exactly what we got. Here you can see also that price broke structure right here, spent some time below it, came back up, came to exactly to the value area high, sold off again. Right now, if we put our range back on right here, then we can see that price is now at the range low. So this could potentially be a new deviation, where this was just a liquidity grab. And then if we hold here, then you can expect the range to continue and expect a move to the range high again. However, right now the volume profile has a great confluence for us, because price is barely hold. We had a very aggressive move up, push up, and we are now around the range low level. However, I would not enter here already. What I would like to see is to get either pushed down first or later, but then get above the volume area low. Once that happens, that's your sign that you have acceptance back in your range, and then you can look for longs back to your value area high again, and then get this move. So with the use of the volume profile, you can identify what your true range is to work with, and it gives you extra confluence to wait for the acceptance back in the value area, because right now you are holding your range low level. However, this could also just be a bearish retest, and that price pushes lower from here. So if you wait for the acceptance back in your value area high low here, then you can play the rotation back to the high. And that's how I use the volume profile to my advantage. Often you want to have it as clean as possible, so then you have just this range, what you see like here. But can you give you that extra confluence to see this is a deviation, reclaim in the value area high, rotation back to the value area high. Here is sweep. Now we want to have that little more confirmation to reclaim the value area low and then get back to the range high. That's basically how I use the volume profile to my advantage. It's pretty simple, not too hard, and that's also why ranges are so important, because you want to keep it as simple as possible. As I said, my trading strategy is built around systematic range trading, and within the Met Trading server I share my thoughts and views throughout the day. I also stream multiple times a week where people can ask questions and where I try to educate people with the knowledge that I have experienced over the years. In this description you can find a link to the free server, so make sure to check that out. Thanks for watching, and let me know which topic you want me to cover next time. And I hopefully see you in the next video.